$500 isn't life-changing. It won't buy you a Lamborghini or a private island. You can't retire on it. But it's enough to plant the seed for something bigger. Think of it as the start of a journey to financial freedom. In online investing, that $500 holds potential. It's your ticket to a world of opportunity. Imagine your money multiplying while you sleep. That's the power of compounding. With online investing, this power is at your fingertips. You don't need to be a Wall Street hotshot. All you need is $500 and an internet connection. This guide will break down the steps to transform that $500. We'll explore online investing, giving you the tools to navigate with confidence. From basics to advanced strategies, we've got you covered. Ready to turn that $500 seed into a money tree? Let's get started. The internet has revolutionized the way we live, work, and invest. Online platforms have democratized investing, making it accessible to anyone with an internet connection. The online world offers a vast array of investment options, each with its own risks and rewards. Start small, invest gradually, and scale up as your knowledge grows. Educate yourself to navigate the digital landscape of opportunity with confidence. Turning $500 into a fortune is not a get-rich-quick scheme. It requires patience, discipline, and a commitment to learning. Think of it as a marathon, not a sprint. Stay focused on your long-term goals. Understand your financial situation and aspirations. What are your financial goals? Ready to embark on this journey to financial freedom? Let's explore the principles of financial literacy. Before you invest, understand the language of money. It's easier than you think. Basic financial literacy empowers smart money moves. First, interest. It's the rent your money earns. Investing is lending your money for interest. Next, value goes beyond price. Understand true worth to make smart decisions. Money management is planning your finances. A budget gives you control and freedom. Master these basics to play the financial game strategically. Section 2. The goal-setting game changer. Setting goals is like having a GPS for your finances. It gives you direction and keeps you motivated. Your goals need to be smart. Specific, measurable, achievable, relevant, and time-bound. Don't just say, I want to be rich. Get specific. The more specific you are, the easier it is to track your progress. Celebrate those small wins along the way. Choose goals that align with your values and aspirations. You're not just dreaming, you're creating a roadmap for success. Section 3. Money management, not a spectator sport. Money management isn't a spectator sport, it's an active game you need to play to win. Track your income and expenses for a month or two. You might be surprised where your hard-earned cash is actually ending up. Creating a budget doesn't mean depriving yourself, it's about making conscious choices. Do you really need that daily latte? Or could that money be better used to reach your goals? Remember, small changes can have a big impact over time. Section 4. The value of value beyond price tags. In the world of investing, understanding value is crucial. It's not just about looking at the price tag, it's about digging deeper to determine the intrinsic worth of an asset. Think of it like buying a used car. You wouldn't just look at the sticker price, right? You'd check its mileage, condition, and compare it to similar cars on the market to assess its fair value. The same principle applies to investing. Whether you're considering stocks, real estate, or any other asset, research is key. Look beyond the hype and marketing jargon. Understand the fundamentals of the investment. What are its future prospects? What are the risks involved? Remember, the price you pay for an investment should reflect its intrinsic value. Don't get caught up in emotional investing or follow the crowd. Do your due diligence, be patient, and only invest in what you understand. Mastering the art of valuation takes time and practice, but it's an essential skill for any investor looking to make informed decisions and build long-term wealth. Remember those stock market tickers you see in movies? Flashing numbers reflecting fortunes made and lost. Well, the stock market isn't just for Wall Street hotshots anymore. Thanks to online platforms, buying and selling stocks is now as easy as ordering takeout. With just $500, you can start building a portfolio of stocks, owning tiny pieces of companies you believe in. Think Apple, Tesla, or maybe even that cool new gaming company everyone's talking about. But hold your horses before you go all in on that hot stock tip from your uncle. Investing in individual stocks comes with risks. Remember, higher potential returns usually come with higher potential losses. It's like riding a roller coaster. Exhilarating, but potentially nauseating. That's why research is your best friend. Understand the company, its financials, its competitors, and its future prospects. Don't put all your eggs in one basket, or in this case, one stock. Diversification is key. Spreading your money across different stocks, even different industries, helps mitigate risk. Think of it as a safety net. If one stock takes a hit, the others can cushion the fall. Don't have the time or energy to research individual stocks? No problem, enter ETFs or exchange-traded funds. These handy investment vehicles are like pre-packaged baskets of stocks, bonds, or other assets. Think of them as a one-stop shop for instant diversification. Want exposure to the tech sector? There's an ETF for that. Interested in emerging markets? There's an ETF for that too. ETFs trade on stock exchanges, just like individual stocks, making them easy to buy and sell. They usually have lower fees compared to actively managed mutual funds, which can eat into your returns over time. Plus, ETFs offer transparency. You know exactly what you're investing in. No more mystery meat portfolios. However, remember that ETFs, like any investment, come with risks. Their value can fluctuate based on market conditions. It's essential to understand the specific holdings and risk profile of an ETF before investing your hard-earned cash. Ever wished you could be the bank lending money and earning interest? Well, with peer-to-peer P2P lending, you can. Online platforms connect borrowers directly with individual investors like you, cutting out the traditional financial middleman. You can choose to fund personal loans, small business loans, or even real estate projects. P2P lending can offer potentially higher returns compared to traditional savings accounts or bonds. Plus, it allows you to invest in your community, supporting individuals and businesses directly. However, it's crucial to remember that P2P lending carries risks. Borrowers may default on their loans, leading to potential losses for investors. That's why it's crucial to diversify your P2P investments across multiple borrowers, just like you would with stocks. Carefully assess the creditworthiness of borrowers and choose platforms with solid track records and robust risk management practices. Section 4. Beyond the basics. Exploring other avenues. While stocks, ETFs and P2P lending are great starting points, the world of online investing offers even more avenues to explore. Real estate crowdfunding platforms allow you to invest in commercial or residential properties with smaller amounts of capital, potentially earning rental income and property appreciation. Cryptocurrencies like Bitcoin and Ethereum have gained immense popularity in recent years. While highly volatile, they offer the potential for high returns. However, it's crucial to tread carefully, understand the risks involved, and only invest what you can afford to lose. Remember, diversification is key. Don't put all your eggs in one basket, no matter how shiny or promising it may seem. Spread your investments across different asset classes to mitigate risk and maximize your chances of long-term success. Section 5. Choosing your investment battlefield. With so many online investment options, it's like stepping into a financial candy store. But before you go on a spending spree, take a step back and define your investment strategy. What are your financial goals? What's your risk tolerance? How much time and effort are you willing to dedicate to managing your investments? If you're aiming for long-term growth and can stomach some market ups and downs, a diversified portfolio of stocks and ETFs might be a good fit. If you're looking for passive income and are comfortable with moderate risk, P2P lending or real estate crowdfunding could be attractive options. Remember, there's no one-size-fits-all approach. The best investment strategy is the one that aligns with your individual goals, risk tolerance, and financial situation. Don't be afraid to seek guidance from financial advisors or mentors if needed. Section 1. The power of compounding. Your money's secret weapon. Imagine a snowball rolling down a hill. It starts small, but as it picks up speed and snow, it grows exponentially. That's the power of compounding in action, your money making money, and then that money making even more money. It's like a financial chain reaction that can turn your initial $500 into a much larger sum over time. Here's how it works. When you reinvest your earnings, whether it's dividends from stocks or interest from bonds, those earnings generate their own earnings. It's like a money-making machine that keeps churning out profits on top of profits. The longer you let your money compound, the more powerful the effect becomes. Think of it as planting a tree. It takes time for a tiny seed to grow into a mighty oak. Similarly, it takes time for the magic of compounding to work its wonders on your investments. The key is to start early, be patient, and let time be your ally. Remember, even small amounts invested consistently over time can grow into significant wealth thanks to the power of compounding. Section 2. Diversification. Don't put all your eggs in one basket. You've probably heard the saying, don't put all your eggs in one basket. Well, in the world of investing, this adage is golden. Diversification is about spreading your risk, ensuring that a single misstep or market downturn doesn't wipe out your entire portfolio. Think of it like building a sturdy house. You wouldn't want to build it on just one pillar, would you? Similarly, your investment portfolio should have multiple pillars of support, each representing a different asset class or sector. Investing in a mix of stocks, bonds, real estate, and other assets can help cushion the blow from market fluctuations. When one asset class is down, another might be up, balancing out your overall returns. Remember, diversification is not about eliminating risk altogether. It's about managing it wisely. It's about creating a resilient portfolio that can weather market storms and keep you on track toward your financial goals. Section 3. Reinvesting profits. The snowball effect. Remember that snowball we talked about earlier? Well, reinvesting your profits is like packing more snow onto that snowball, accelerating its growth even further. When you reinvest your earnings, you're essentially buying more of the asset that generated those earnings, whether it's stocks, bonds, or real estate. This creates a powerful cycle of growth. Your investments generate earnings, those earnings buy you more investments, which in turn generate even more earnings. It's like a snowball effect that can turn small gains into substantial wealth over time. Think of it like planting a fruit tree. And you wouldn't just harvest the first few fruits and walk away, would you? You'd replant some of those seeds to grow even more trees and enjoy an even bigger harvest in the future. Reinvesting your profits is all about playing the long game. It's about delaying gratification today to reap the rewards of exponential growth tomorrow. Section 4. The art of research knowledge is your financial power. In the world of online investing, information is power. Before you hit that buy button, take the time to research your investment thoroughly. Understand the company, its financials, its industry, its competitors, and its future prospects. Don't rely solely on headlines or social media buzz. Dig deeper, read financial reports, analyze trends, and form your own informed opinions. Remember, investing without research is like driving with your eyes closed, risky, and potentially disastrous. Think of it like buying a used car. You wouldn't just hand over your hard-earned cash without checking its mileage, condition, and history, would you? Similarly, you should approach your investments with the same level of scrutiny and due diligence. Remember, knowledge is your best defense against making impulsive investment decisions that could cost you dearly. Section 5. Staying ahead of the curve, adapting to the ever-changing market. The financial markets are like the ocean, constantly ebbing and flowing, throwing unexpected waves your way. Staying ahead of the curve requires adaptability, a willingness to learn and adjust your strategies as market conditions change. Keep abreast of economic news, industry trends, and geopolitical events that could impact your investments. Don't be afraid to rebalance your portfolio periodically, selling assets that have performed well and buying more of those that have lagged behind. Think of it like sailing a ship. You need to adjust your sails according to the wind and navigate around storms to reach your destination safely. Remember, the world of online investing is dynamic and ever evolving. Staying informed and adaptable is crucial for long-term success. Section 1, From Seed to Harvest, your $500 transformation. Remember that $500 seed we talked about, the one that seemed too small to make a difference? Look how far we've come. We've journeyed through the fundamentals of financial literacy, explored the exciting world of online investing, and uncovered strategies to maximize your returns. You've learned about the power of compounding, the importance of diversification, and the art of research. You've gained the knowledge to navigate the digital landscape of opportunity with confidence. That $500 is no longer just a number. It's a symbol of your commitment to financial growth. It's the foundation upon which you can build a brighter financial future, brick by brick, investment by investment. Remember, it's not about getting rich quick. It's about making smart choices today that will pay off in the long run. Think of it like planting a garden. You start with small seeds, nurture them with care and patience, and over time they blossom into a bountiful harvest. Similarly, your $500, when invested wisely, has the potential to grow into something much greater, providing you with financial security and the freedom to pursue your dreams. The power of patience. Time is your greatest ally. In the age of instant gratification, it's easy to get caught up in the allure of quick riches. But when it comes to investing, patience is not just a virtue, it's your greatest ally. Remember the snowball effect of compounding? It takes time for that snowball to gain momentum and grow exponentially. Similarly, your investments need time to work their magic. Don't get discouraged by short-term market fluctuations or expect overnight miracles. Stay focused on your long-term goals, ride out the market's ups and downs, and let time work its magic. Think of it like building a skyscraper. It's a slow and steady process, brick by brick, floor by floor. You wouldn't expect to see a finished skyscraper after just a few weeks of construction, would you? Similarly, building wealth through investing takes time, dedication, and a belief in the power of consistent effort. Beyond the dollars and cents, the freedom you're building. While financial growth is undoubtedly important, it's essential to remember that money is just a tool. The real value of investing lies in the freedom it can provide, the freedom to live life on your own terms. Imagine a life where you're not burdened by debt, where you have the financial security to pursue your passions, spend quality time with loved ones, and make a difference in the world. That's the true power of financial freedom. It's not just about having more money, it's about having more choices. Think of it like unlocking doors to new opportunities. With each investment you make, you're opening doors to experiences, adventures, and a future limited only by your imagination. So, as you embark on your investment journey, keep in mind the bigger picture. The freedom, the flexibility, and the peace of mind that come with knowing you're in control of your financial destiny. Taking action, your first steps to financial empowerment. You've gained the knowledge, you've embraced the mindset, and now it's time to take action. Remember, even small steps can lead to significant progress over time. Start by setting up a budget, tracking your expenses, and identifying areas where you can save more and invest wisely. Open an online brokerage account, explore different investment options, and start building your portfolio, even if it's just with a small amount each month. The key is to start somewhere and stay consistent. Think of it like learning to ride a bike. It might seem daunting at first, but with each pedal stroke, you gain confidence and momentum. Similarly, the world of investing might seem intimidating at first, but with each step you take, you'll gain experience, knowledge, and the satisfaction of knowing you're building a brighter financial future. Your financial future starts now. Embrace the journey. Congratulations. By reading this guide, you've taken the first step towards financial empowerment. You've shown a willingness to learn, grow, and take control of your financial destiny. Remember, the journey to financial freedom is a marathon, not a sprint. There will be ups and downs, challenges, and triumphs along the way. But with the right knowledge, a solid plan, and a commitment to consistent action, you can turn your financial dreams into reality. So embrace the journey, stay curious, never stop learning, and most importantly, enjoy the ride. Remember, your financial future starts now, and the possibilities are limitless. Start small, dream big, and watch your $500 seed blossom into a future filled with financial security, freedom, and the ability to live life on your own terms. Thanks for watching Akuko TV. Don't forget to subscribe.